Yes, so hi everyone and a warm welcome to our channel. I hope you are doing well. Studies and preparations are going on. In continuation to our revision series that is in 100% English, especially for you guys. This is the next chapter, that is place of supply. Chapter number 1 and 2 have already been uploaded. Let's start. All the sections that we are going to discuss is from IGST, not from CGST. Now understand, first of all, to determine the nature of transaction, we need two ingredients. Sorry, we need two ingredients. One is the location of supplier and one is the place of supply, right? Now if these two are in one state, then it becomes a intra transaction, otherwise it becomes a inter nature transaction. Okay, so if it is in one state or one UT, it is an intra nature, otherwise it is an inter nature, for which IGST will be levied. Primarily, location of recipient is not relevant here to understand and to determine the nature of transaction, but in one case it is. This is a point that I will discuss while covering section number 7 and section number 8, and at that time I will make you understand how location of recipient is also important, because that is something that students tend to miss out. But yes, primarily it is about location of supplier and place of supply. Now, location of supplier can be basically his place of business, his fixed establishment, or if nothing is there, his residence. That definition of location of supplier is not tested very much in detail, so you can just have a read if you get time. But yes, basically it is the location from where he is operating, right? Now, what is the meaning of place of supply? GST is a destination based tax, right? So which state should get the revenue? The revenue should be accrued to that particular state where the place of supply is being determined, where the consumption is being done, where the benefit of the goods or services is being derived. That state should have the share of revenue. As you know, whenever there is any transaction under GST, 50% goes to the center and 50% goes to the state. So which state, that will be determined with the help of place of supply. So that is the feel factor you need to have in the mind whenever we are determining the place of supply. You have to see where the benefit is being derived. Okay, so we are going to be dealing with 4 sections. Section number 10, 11, 12 and 13. Section number 10 and 11 are with respect to goods, 12 and 13 are with respect to services. Section 10 is at the domestic level supply goods, and 11 is import export of goods. 12 is services when location of supplier and location of recipient both is in India, and 13 when one of them is outside India. Is it clear? So we will start. Let's come to section number 10. Place of supply of goods other than import export, because import export will be dealt in section number 11. So 5-6 cases we will talk about. Let's start. Section number 10 1A, that is the supply involving movement of goods. Supply involving movement of goods, the place of supply will be where the termination of the movement is happening for the purpose of delivery. So I'm not talking about a mere halt, I'm talking about termination of the movement for the purpose of delivery to the recipient. That state will be the answer of place of supply. Now who is causing the movement of goods? I don't care. Supplier is causing, recipient is causing, anyone is causing, I don't care. The focus is on movement is happening and where it is being terminated for the purpose of delivery. 10.1c, 10.1b I will cover in a couple of minutes. 10.1c is no movement of goods. No movement of goods means, for an example, let's say I have a machine which is on rent. So I am a lessee, I have taken a machine on rent, and if tomorrow I make a purchase transaction, I buy that machine. So when I buy that machine, is there any movement of that machine? Answer is no, it is already with me because I had taken it on rent. So this will fall under section 10.1c, and answer will be the location, that state where the machine is already there, the goods are already there, because there is no movement at that time. So at the time of delivery to the recipient where the goods are, that will be the answer of place of supply. Is it clear? That is 10.1c. 10.1ca is a very specific case. It is tested a lot. So pay attention. 10.1ca is over the counter sale to unregistered person. So for example, I am in Maharashtra, I am a person who is based in Maharashtra, but I am, let's say I have gone to Shimla, and in Shimla over the counter, let's say there is a physical store from where I buy a bag. Okay, this is me, I am originally based from Maharashtra, and I buy a bag in a OTC sale transaction, over the counter transaction, right? Now here the condition for the place of supply you have to see is whether my state is being recorded on the invoice or not. If the invoice records my state as Maharashtra, the answer will be Maharashtra. Otherwise the answer will be location of supplier, because we don't have any other place, right? From the point of view of supplier, he has to fix the place of supply. There is no other state, right? We don't have the state of the recipient recorded on invoice. So obviously the answer will be back to the location of supplier. In Hindi we say tir ghuma ke vapas, means the arrow went to find the answer, but it came back because there is no other state involved in the transaction. So if the recipient state is recorded on the invoice, that will be the answer. Otherwise, the location of supplier will be the answer. Is this clear? This is a simple case. Now, one point to be noted, everyone. This 10(1)(CA) is notwithstanding 10(1)(A) or 10(1)(C). So if in a transaction both the things are applying, there is a movement of goods also, and maybe there is a OTC sale transaction also. So we will apply 10(1)(CA). Point number 2. Detailed address is not required. My state name is sufficient. The detailed address, my home address or my office address, is not required. Okay. What is the field factor here? The field factor is that the benefit of the goods is going to be utilized in my state. I'm going to go back to Maharashtra and I'm going to utilize the goods. Hence, that is the answer for 10(1)(CA). 10(1)(D) is goods are assembled or installed at a site. Let's say I'm in Maharashtra. I buy a goods for the purpose of installing in a factory in Gujarat. So there the benefit is going to be accrued. So answer for the place of supply will be that particular Gujarat state where the installation or assembly is being taken place. 10(1)(E), the goods are supplied on board a conveyance. For example, vessel, aircraft, train, motor vehicle. Here, the answer of the place of supply will be that state where the goods are taken on board a conveyance. Now, here you might feel that, sir, by applying that field factor, the place of supply should be where the benefit is being consumed. But is it easy to track when a train is moving, let's say from state number A to B to C to D? Is it easy to understand where the goods are being purchased, where the goods are being consumed, where something is being taken benefit out of? No, it is not legally possible to implement. So the law is always in a balanced point of view, that something which should be logical, but something also that should be legally and feasible. It should be feasible to implement. Okay, so here the answer is where the goods are taken on board a conveyance. So what the supplier will do, he can have this particular mechanism in place where he is recording the state in which the goods are taken on board a conveyance. That will be the answer of place of supply. Is it clear? Next, 10(1)(B), that is bill to ship to model. Bill to ship to model will do in a very simple format. This legal language you don't need to do because it becomes very confusing. Just understand there are 3 parties involved. Now what happened? Let's say, 1 minute. Let's say I'm here in Maharashtra. Okay. And I buy goods from Mr. Ramesh. Ramesh is in, let's say, Delhi. And here there is Sumit. Sumit is, let's say, in Kerala. Now just understand one thing. I bought a calculator. For example, I placed an order for calculator from Mr. Ramesh. So Ramesh is supposed to supply me a calculator. Now, while the goods were being packed, the dispatch has not yet taken place. I received a call from Sumit asking for the same calculator. So I said, okay, I will supply. Mr. Sumit, I will supply this calculator to you. I immediately make a call to Mr. Ramesh and I say, Mr. Ramesh, that you have to dispatch this calculator to Mr. Sumit's address. Now, does Ramesh care about it? Answer is no. Ramesh says that, okay, Mr. Valimbe, as you say, because you are the buyer. Now, wherever you say to deliver, I will do that. So Ramesh sends that calculator to Sumit. Ramesh dispatches that calculator to Mr. Sumit. And Sumit has bought from me. Sumit has bought from me, so I have sold it to Mr. Sumit. Now, does Sumit care whether the goods are coming from Mr. Ramesh or here or there? No. Mr. Sumit is not at all concerned. Mr. Sumit just wants the calculator and he is concerned with me because he is making a purchase transaction from me. Now, understand how many supplies are there. In this particular transaction, how many supplies are being there? Supply number 1. This is supply number 1 and this is your supply number 2. What is this? Is there any supply in this particular case? Answer is no. There is no supply here. Mr. Ramesh is not concerned with Sumit and Mr. Sumit is not concerned with Ramesh. Is this clear? So for this particular supply, we are going to apply section number 10(1)(B, that is bill to ship to model. And as per bill to ship to model, in 10(1)(B, the answer of place of supply is the principal place of business of this particular Mr. Siddesh, who is referred to as third person if you read the Barat language, that the instructions of third person, the goods are dispatched here. So the principal place of business of Mr. Siddesh will be the answer of place of supply. So here 10(1)(B will be applied and answer will be Maharashtra. What about this? In supply number 2, how will the place of supply be determined? We are going to apply section number 10(1)(A. That is the movement of goods is taking place and the movement is terminated in Kerala for the purpose of delivery. So answer will be Kerala. Now here you might get confused that, sir, in this particular case, the supply is being initiated from Mr. Ramesh. I don't care. I clearly told you in section number 10(1)(A that I don't care who is initiating the movement. My focus is that movement should happen. So if the movement of goods is happening, it is being terminated for delivery in Kerala, the answer will be Kerala. And for this business, there is no supply. The exact same transaction I have replicated here. If you want, you can take a screenshot of this particular part, and yes, this is important for the purpose of your exam. Okay, so this is your section 10(1)(b). Now section 10 is done. Let's go to section number 11, import export of goods. It's very simple, that place of supply with respect to the goods, if it is being imported, it will be the principal place of business, basically the registered place of business of the importer, and if the goods are being exported, it will be the outside India. The answer will be outside India. Now what I will do, while after covering the place of supply sections, the primary sections, we will talk about the definitions of import export of goods as well as services, right? But it's not a very big detailed definition. Export of service is important, so that we will pay attention to very properly. But import export of goods is very simple, that goods are coming into India or they are going outside India. And what do we mean by India? Till the 200 nautical miles. So that is being crossed in case of export of goods. Okay, so basically when the goods are imported into India, the answer will be the importer's location, importer's place of business, and that state will get the GST because there the benefit is going to be utilized. And if it is an export, then the location outside India. But yes, we are not going to name any country. We will just say that place of supply is outside India. Okay, now let's start with section number 12, that is place of supply of services where both are in India. Now sometimes in the paper you write supplier is in India. Don't say supplier is in India, say location of the supplier and location of the recipient is in India, because this location term has been separately defined in your definitions. Is it clear? Okay, now while covering section number 12, we are going to use one word, B2B or B2C. Okay, this is not something that we are going to be using in section number 13 because one of them is outside India. But in section number 12, we are going to use B2B means registered to registered, B2B means business to business transaction, and B2C means business to consumer transaction. So the recipient is unregistered. In the exam, before applying any subsection, first carefully identify who is the recipient. Recipient means the person liable to pay the consideration. Section number 2, clause 93. It is very important because unless and until you identify the recipient correctly, you are not going to identify the status correctly. So first you identify the recipient, then you see the status, and then you apply the subsection, right? Okay, let's start with section number 12. Now what is this section number 12? Both are in India and we will apply the subsections. How many subsections are there? Subsection 14. So 1 to 14 we have. Let's start 12.1. 12.1 is the basic applicability of this section. That section number 12 is going to apply when location of both is in India. So this was basic, that both are in India. We are going to apply section number 12.1. 12.2 is the default provision. Default provision means if any of the subsection from subsection 3 to subsection 14 is not going to apply, we will apply section number 12.2, that is the residual clause. Okay, so here you will see whether it is a B2B case or B2C case. If it is a B2B case, you pick the location of the recipient, it's a registered address, you have that. If it is a B2C case, you ask one question, that whether that recipient's address is available on records of the supplier. If the answer is yes, that location, that state will be the answer. Otherwise we will say tir guma ke wapas, means the location of the supplier will be the answer. The answer of place of supply will be back to the location of supplier, because we don't have anything else. We don't have the recipient registered, we don't have the unregistered recipient address on record. So here the answer will be the location of supplier. Next, section number 12, subsection 3, that is related to immutable property. Now with respect to immutable property, any service, 4 clauses are covered. Clause number 8, directly related to the property, for example engineer, architect, interior designer, contractor, builder. Clause number B, any accommodation. Here accommodation in houseboat and vessels is also included. Clause number C is with respect to the accommodations for the purpose of functions. So for example, there is any marriage ceremony or there is some cultural event being organized, in that particular accommodation for which you are taking it the hall or that banquet on rent. So that is clause number C. And clause number D is ancillary services. So any service linked to the above. So these 4 clauses are covered. Answer of place of supply will be the location or intended location of the immutable property. Now what is the example of this intended location? For example, I have a plot in Lonavala for which I am hiring an architect. So he is going to design a plan. Existing, there is no property, there is just an intended location. The property is yet to come into existence. So here the place of supply will be Lonavala, because that is the intended location of the property. So this is your section number 12, subsection 3. One additional point, that if this location or intended location of the property, house, boat, vessel happens to be outside India, in that case, if the answer is outside India, because it is outside, the location is outside India, so place of supply will be outside India. That may lead to a loss of revenue for the government. Why? Because if place of supply is outside India, it may become an export of service. It may become exempt, because in the exemption also we cover this particular transaction where the place of supply is outside India, then the amount is exempt. So here, to avoid the loss of revenue for the government, what government said, that in this particular case the answer will not be the location, but instead the location of the recipient, and that recipient is in India. Okay, so if that property location or intended location happens to be outside India, then the place of supply will be location of recipient, so that the government does not lose its revenue. Next, a query. This student has a query that, sir, what if this property happens to be, or that houseboat or vessel happens to be in more than one state? What will be the answer then? So here, first of all, we will write a line that the answer of place of supply will be each of the respective state or union territory involved. And what will be the value of, what will be the proportion of value? Basically, see, what is the issue? That property is located in 2 or more states. So every state wants its own share of GST, right? So every state will get the revenue, but what will be the valuation? Let's say total amount is 1 lakh. So how much value will be put with respect to the place of supply in state A or state B? So that will be as per the contract agreement which is entered in this behalf. But if it is silent, if it is absent, then in that case we will apply rule number 4 IGST rules. Here we are going to apply 5 to 6 rules. You don't need to learn the rules per se, but if you're able to, then it is rule number 4. I'm just telling you. So if you're able to learn it. Otherwise, don't quote it wrong in the exam. So here we will apply rule number 4 of IGST. And what does rule number 4 of IGST states? That depending upon what your case is, we will give you the answer of how to bifurcate the value. I hope you are able to understand the problem statement. What is the problem statement? That let's say I am going and staying in Hyatt Hotels, okay? And Hyatt Hotels has that particular stay is happening in, let's say, 2 states. Let's say Delhi as well and Haryana as well. So in that case, I have to bifurcate the value. I means Hyatt has to bifurcate the value. That total, let's say the consideration is 50,000. Now out of that 50,000, some proportion should be with respect to Delhi and some proportion should be with respect to Haryana, because each respective government wants its own share of revenue. So that bifurcation we are going to see here, that firstly you see as per the contract agreement, but if it is absent, you go for rule number 4. Now what does rule number 4 say? That what is the type of service? Case number 1, if it's a lodging accommodation, and it is not a single property in 2 or more states, means basically it's a lodging case. Out of all the services, it is a stay service. Okay, let's simplify this. It is a stay service, and stay service is happening in a separate properties. It is not a single property, it is a separate property. So Hyatt has a unit in Delhi and a different unit in Haryana. It's not a single property, it's a separate property. So here the bifurcation will be as per number of nights stayed in such property. So let's say I stayed in 3 days for I stayed for 3 days in Delhi unit and 2 days I stayed in Haryana unit. So 3:2, Delhi and Haryana, the bifurcation will be done. Next, if it is any other case, means what do you mean by any other case? If it is any other service, or let's say it is a case of single property, or it is a case of single property on the border of 2 states. It is not a separate property. So here how the bifurcation will take place? The bifurcation will be as per the area of property lying in each state. Let's say this is a border. Let's say this is a border and this is a property. Hyatt Hotels, this is a property, and let's say the area lying in state number A and state number B is 10,000 square feet and 15,000 square feet. So let's say it is some service other than accommodation, or it is an accommodation but it is in a single property. So case number 1 is a very specific case. Apart from this, it will fall in case number 2. So here the total valuation will be divided in the format in the ratio of 10:15, or we can say 2:3. State A will get 2 share and state B will get the ratio of 3. And third is again specific, that if it is a case of accommodation in a houseboat or vessel or any of the ancillary services, then the bifurcation will be as per the time spent by the boat in each particular state. So houseboat also keeps on moving, right? So here as per the time spent, the bifurcation will happen, and this has to be, the ratio has to be decided by the supplier itself as per the declaration that he files. So supplier will take care of that. You as a recipient don't have to worry about it. Okay, you are just going to be paying the GST. Okay, this is clear. Next is section number 12, subsection 4, which involves certain personalized services. These pictures can help you memorize things. So this will restaurant, catering, beauty treatment, makeup, and personal training and gym related services. So here the focus is not on the recipient status. As you can understand, see, somewhere you will have to have a feel factor in mind, and at the end somewhere you also have to learn that where the B2B B2C is relevant and where it is given in the subsection, otherwise you will apply it wrongly in the exam. So here the focus is on personalized services, so it does not matter B2B B2C, the place of supply will be the state where these are actually performed. So I am a registered person in Maharashtra, but I am taking some treatment or I am having some catering service done in Delhi. So here the personalized service is being done, so answer will be Delhi, where the services are actually performed. Next is your 12.5, that is training and performance appraisal. Now here it is B2B and B2C because very well it happens in the business transaction B2B level. So B2B the location of recipient, otherwise B2C the location where the services are actually performed. 12.6 and 12.7 are events. You can learn this together. 12.6 and 12.7 are events. First is your 12.6 is your admission to event, 12.7 is your organization of event. So obviously first we will talk about admission, we will enter the event and then we will see who has organized it. So 12.6 and 12.7. So 12.6 is the answer of place of supply will be where the event is actually being held, because understand the feel factor that here you are giving the entry. You are giving an entry to a person. So it does not matter he is registered or unregistered. The focus is where this entry is being given. It can be any event. It can be some amusement park. So focus, it can be a cricket match. So some event, something is being done and something is being charged for you to allow, they are allowing you to enter that premises. Okay, so this will include admission services, type of event, it can be anything, artistic, cultural, sports, scientific, educational, entertainment, amusement park, and it will include the ancillary services as well. For example, for a 3D show, a goggle is being given on rent. So that will also be covered in the 12.6 related only. And here the answer will be where the event is actually held or that park is actually held. Next 12.7, organization of event. Now here B2B, B2C will matter. Organization again of any type of event or ancillary services, for example, lighting, DJ service. So these are ancillary to the main organization of event. Plus it will also include assignment of sponsorship. So assignment of sponsorship is also covered if it is ancillary to the main organization of event. It will be covered in 12.7. But in isolation, sponsorship service place of supply is determined as per section number 12 subsection 2. This is a very important point. Okay. So here 12.7 B2B B2C is relevant because these things happen in the corporate level also. The recipient status is relevant here. So if it is a B2B case, the location of recipient. If it's a B2C case, where the event is actually being held. And just like your immovable property, if the event is outside India, then answer will not be that. Instead the answer will be location of recipient, otherwise it can lead to loss of revenue to the government. Okay, so B12.7 is actually tested a lot. So I'm repeating one point, I'm just explaining this again, that if it is a B2B case, the recipient happens to be registered, do not see where the event is being held. The event location will stand irrelevant. Okay, the location of event is only relevant when it is a B2C case. Clear? Now, what if the event is being held in more than one state or one UT? Again, we will write that same line that each of the respective state UTs as involved, the valuation and the proportionate value will be as per the contract agreement entered in this behalf. But in the absence of the contract agreement, it will be decided as per rule number 5. And rule number 5 does not state anything specific. It just states generally accepted accounting principles, and that particular gap will be given in your question. Then 8, 9 and 10 is with respect to transport and travel. So 12.8 is transportation of goods, 12.9 is transportation of passenger, and 12.10 is services on board a conveyance. So you can learn these three together. Transportation of goods, it can also include mail and courier. Again, B2B, B2C will be relevant because the location of recipient, and these kind of things happen in the corporate level also, business level also. So B2B, B2C are relevant here. If it is a B2B case, location of the person. If it is a B2C case, then see where the goods are handed over for transportation. So for example, I am based in Maharashtra and I am an unregistered person. While I was on a trip to, let's say, Delhi, I handed over certain goods to DTDC for the purpose of transportation to US. What will be the answer of place of supply? Answer of place of supply will be Delhi. Why? Because I am an unregistered person. The focus is where the goods are handed over for the purpose of transportation. Is it clear? Now certain points to be noted. The destination of the goods is irrelevant. The goods are going to US. It does not matter. You just have to focus on where the goods are handed over for transportation or if the person is registered. Second important point, in such kind of questions, you have to pay attention on who is the recipient. Okay, a lot of times it is given that, let's say, Mr. Valimbe has sent goods to Mr. Ramesh in US. So who is the recipient? I am the recipient. I would be the person paying the consideration. My recipient, me being the recipient, my status is relevant to determine the nature of the transaction and the place of supply. Here students commit a mistake. Okay, so please don't do that. Another point to be noted, there is one example in your ICM material. I will just show you if I have opened that. Just give me 1 minute. There is one example with respect to this 12.8 which I feel you should be doing it. See, this particular case, that Mr. Shrikant, the manager, is transferred from UP to Bhopal. Mr. Shrikant's family is stationed in Kanpur. He hires Goel Carriers to transport his household goods from Kanpur to Bhopal. So they are giving you 3-4 states. Does not matter. You need to have a structured thinking while you solve the questions. First of all, see who is the recipient. Recipient is Mr. Shrikant. Okay, this is happening in his personal capacity. So bank is where, he is posted where, I don't care. This is a B2C transaction. My focus is on when the goods are handed over. So you just see where the goods are handed over. The goods are being transported from Kanpur to Bhopal. My answer will be Kanpur. He is stationed in place A, he is going to place B, I don't care. My focus is where the goods are handed over. So while solving the place of supply questions, have a very clear approach as to what you are finding in the, what you need to find in the question. Okay, a lot of information can be very irrelevant. Next. 12.9 passenger transportation service. If it is a B2B case, the location of the person. If it is a B2C case, now obviously a person is not handed over, a person embarks the journey, right? So here the answer will be where the passenger embarks the journey on the conveyance for the continuous journey. Now conveyance can be anything. It can be a vehicle, aircraft, vessel, anything. Embark means he is starting his journey, and continuous journey means without any break. So if the person is disembarking the conveyance and let's say is resuming it later, or the conveyance is being changed, then it is not a continuous journey. Is this clear? And second important point, return journey is always going to be treated as a separate journey. So let's say I'm traveling from Pune to Delhi, and I'm also traveling back from Delhi to Pune. Now it is okay if the invoice, if the boarding pass, if the tickets are issued at the same time, still the return journey will be treated as a separate journey. So for going from Pune to Delhi, the embarkation point, I'm assuming this as a B2C transaction, the embarkation point will be Pune, the answer of place of supply will be Maharashtra, and for the return journey, the answer of the place of supply will be Delhi. Is this clear? Now, if the right to passage is given for the future use and the point of embarkation is not known at the time of issue of right to passage. So sometimes it may happen that the right to passage is given, the amount is collected, but we don't know where the person is going to embark. For example, I buy a package of Air India where I can board 10 domestic flights in next 1 year, and I give a lump sum amount today. So with respect to that amount, how the place of supply will be determined, because it is a B2C case, I am unregistered, the embarkation point is not known because it is for future use and it is not fixed. So here we are going to fall out of section number 12 subsection 9, and whenever any specific subsection is not applicable, you apply default provision, that is section number 12 subsection 2. So here the question will arise whether my address is available on the records of Air India or not. If available, that will be the answer. Otherwise, tir guma ke wapas means the location of supplier. Is this clear? 12.10 services on board a conveyance. Example, I am buying a movie on board a conveyance. The answer will be the first schedule point of departure for that conveyance, first schedule point of departure. Okay, so let's say the flight is Delhi, Mumbai, UP. So what will be the first schedule point? Delhi. It does not matter. Let's say I'm buying the movie in the leg of Mumbai to UP flight. No, still the first schedule point of that particular conveyance, first schedule point of departure for the conveyance will be Delhi. Is this clear? Because this is again one of the silly mistake areas that I have seen that students commit. Okay, now let's move to next. Next is your section number 12 subsection 11, that is telecom service. Telecom means mobile, internet, everything. So this will contain 4 cases. First case, or we can say type number 1, where there is some fixed hardware involved. So fixed telecommunication line, or there is a lease circuit, or there is an internet line, some internet cable, fiber cable, or a cable or dish antenna that you might have seen in the earlier times that you used to have, that Reliance and Dish TV. So here there is some form of a physical hardware involved. Place of supply will be the state where the line, circuit, antenna is installed. This will be clearly given in the question. Okay, but what if it is in more than one state? I will cover that in 1 minute. Just pay attention to the other 3 types. Next is your mobile connection or internet on postpaid basis. So your mobile connection can be either on postpaid basis or on prepaid basis that you recharge. Okay, so this is your postpaid basis. The place of supply will be the place of billing address of recipient on records of the supplier. So for example, my Airtel connection is on postpaid basis and my billing address is in Pune. So tomorrow it is possible that I am paying my bill when I am traveling from, let's say, when I'm traveling in Delhi and let's say I'm in Goa, whatever it may be. So here the answer of place of supply is fixed. The answer is going to be the billing address. Does not matter where I'm traveling, where I am situated at the time of paying my bill. It is completely irrelevant. You will be seeing the billing address. Next is your prepaid basis. So mobile connection, internet, that you first pay and then you enjoy the services. Now here three subtypes are possible. Case number one, if the selling is happening through a selling agent or a reseller or distributor. So this is the point where the recharge will be done. Now this also used to take place in earlier times, not today. So here the place of supply will be address of that selling agent, reseller or distributor as per the records of the supplier. So Airtel at that time had a lot of distributors. Jio must be having its distributors or resellers or agents. Those are authorized agents, right? So their address is available on the records of the main telecom company, that is the supplier of the service, and there the payment is being received, there the recharge is being done. So that is the state, that is the area where the benefit is being derived, that is where the place of supply should be, and that state should get its share of revenue, that is the GST. Or second case is by any person to the final subscriber. So for example, it is not a reseller or a proper agent, but in general the coupons are being sold. Let's say the prepaid coupons are being sold, for example in a college fest or any other area. So here the place of supply will be the location where the prepayment is received or such vouchers are sold. So again the focus is where the payment is received, there the recharge benefit, we can say the initiation of the service is being done, there the benefit is being derived, because that is where the person is buying that coupon. Okay, so that state will get its share of revenue. And this is what happens in today's times. We use the Paytm and other mobile apps for the purpose of recharge. So this is through internet banking or electronic mode. Here answer will be location of recipient on record of the supplier. Other residual cases also the answer will be location of recipient on records of supplier. Somewhat similar to what we did in 12.2. And if this location is not available, then we say tir guma ke wapas, because we don't have any other state, then the answer would be location of supplier. So somewhere if we don't have this answer of location of recipient on record of supplier, the answer will be the location of supplier itself. Now, as we covered in this particular point, what if there is a fixed line? Let's say there is a some form of a cable, some form of a large scale fiber or internet cable being let down, and that is running in more than one state. So let's say it is running from Delhi to Mumbai, from Delhi to Mumbai. So here these terms are known as points. This is known as point and this is known as point. So here the answer will be 1:1. So basically every state will get its proportionate share of revenue. This is your starting point, this is your ending point. So here the answer will be 1:1. What if what if there is any intermediary point running in state C, let's say UP? I'm taking a hypothetical example. So if there are three states involved, intermediary point, will it be considered in this calculation? It will be considered only and only if there is a benefit which is being derived, because our focus is GST is a destination based tax. There should be some benefit derived, that place should get the revenue. So if sometimes what happens is the points are given but only for the operational purpose, there is no actual benefit being derived to any customer there. So in that case the answer will remain 1:1. Okay, and obviously before writing this, what I stated, this point related provision, this is rule number 6. Before this you will write that same line of contract agreement, but if it is absent, then rule number 6 and rule number 6 talks about this points related distribution. Okay, clear? 12 is your financial sector, banking, financial services and stock brokerage. Here the answer will be the location of recipient on records of supplier, but if it is not available, then tir guma ke wapas, that we say the location of supplier will be the answer. Now you might be wondering that what is the example in banking sector or a financial sector, stock brokerage, how come it is possible that the location of recipient is not available in the records of supplier? Yes, it is possible. For example, I'm a customer of HDFC Bank, and let's say I want to get one demand draft made on an urgent basis, and near my home there is no HDFC branch, instead there is a ICICI branch. So I just went to ICICI, paid its fees, whatever the commission and fees it was required, and I got my demand draft made. Now does ICICI has my record, my address on its record? Answer is no, because the KYC and everything I would have done while I was opening my account in HDFC, but I'm not a customer of ICICI. So here the answer of place of supply will be location of supplier itself. Is it clear? 12-13, insurance services. Now insurance is a very regulated industry in India. It is not possible that you do not have the address of the recipient. Okay, so see here, address of recipients pakka hoga. Pakka means for sure you must be having. So here it will be differentiated in B2B, B2C. Please pay attention. In banking, B2B, B2C is not bifurcated. Ideally, it should be in my opinion, but it is not. You have to pay attention here. In 1213, it is bifurcated. So B2B, the location of recipient, B2C, location of address of recipient on record of supplier. Here, the question of what if this record, this address on record is not available will not arise. It is not possible in insurance. You 100% must be having the address of recipient. Is this clear? So this was till section number 12 subsection 13. Section 12 subsection 14 is a very important one, that is advertisement services to government. And when I say government, central, state, statutory body or local authority. Point to be noted, everyone. Delhi Development Authority is not a local authority, recently clarified, can be tested in the exam. Now pay attention. If any advertisement services are given to the government, so that will be classified under 1214. But if any advertisement services are given to non-government, then they are classified and they are used for the place of supply is determined as per section number 12 subsection 2. Is this clear? This is very important. Okay, the place of supply will be as per 12.2 if the recipient is non-government, but if the recipient is government, then you are going to apply section number 12 subsection 14. Now generally when the government gets its any of the schemes advertised, for example Swachh Bharat Abhiyan, Make in India scheme, the ads are generally run in more than one state or more than one union territory. Okay, so here again the first line will be that every state or UT will be the answer, the proportionate value as per the contract agreement, but if it is absent we will apply rule number 3. So rule 3, 4, 5, 6 we have covered till now. This is rule number 3 that we are starting, and rule 3 is very, very important, and this is going to apply only when the contract agreement is absent, right? So what we are trying to achieve in rule number 3 is very, very simple. There is a valuation. Okay, sir, what will be the valuation? That work is of chapter number 6, not of chapter number 3. So this valuation has to be divided into different states. Why different states? Because each state wants its own share of revenue. Okay, so this bifurcation will take place in different states. Now what will be the basis of the bifurcation? Let's say my total value is 1 lakh. Now I want to divide that 1 lakh into states A, B, C, D. So what will be the ratio used? That ratio and the basis of attribution. Attribution means division, distribution. That basis will be covered. That basis will be decided as per this particular table. Now in this table, this has not been asked in detail yet. But what I feel is this particular part, TV channels, they can ask, because here there are some steps involved. Balance it is very logical. Even if you don't cover it exhaustively from the table, you will be able to do it by seeing the question. Hence that has not been asked in detail, but yes, this part that they have asked. So I will cover the above parts also, and we will pay special attention to this particular part. Okay, let's start. Now it will depend on what is the type of advertisement, and then we will decide what will be the basis of this distribution. If advertisement is in newspaper and publication except printed material, because that is covered separately, the basis of attribution will be amount payable to different state-wise edition. So if the amount, total amount payable, let's say the central government is getting its scheme advertised in Times of India. Now Times of India edition Delhi, UP and Maharashtra, the amount being paid to Times of India is 2 lakh, 3 lakh and 4 lakh. So the main advertisement service will also be divided into ratio of 2:3:4. This will be given in the question. Very simple, very clear. I don't think there is a lot of, what can I say, analysis involved. Hence this can be asked in a very limited manner. If advertisement is through printed material like leaflet, diaries, calendar, t-shirt, again it will be the basis of distribution will be the ratio of amounts payable for distribution in different states. But in the ICA example, they have also used the number of material. For example, there are 10,000 leaflets to be distributed in Delhi, 5,000 to be distributed in Maharashtra. So here the ratio will be 2:1. So whatever they give in the question, at the end you have to use it. Advertisement in hoarding other than trains, because train is covered separately. Here again amount payable for different states. Advertisement on train. Now here basically some scheme is being advertised in a train, and that train must be running from state A, B, C, D, whatever it may be, A, B, C, D. Now many people must be seeing that. So benefit is actually derived in every state, but what will be the basis of attribution? Ratio of length of the railway track in each of the state. So for example, this much track is covered in A, this much track is in B, this much track is in C, and this much length of the track, whatever kilometers or whatever it may be, is in D. Now how will we determine, how will the supplier determine? This information is available in the indianrail.gov.in. So for example, there is a Vande Bharat train. Okay, now Vande Bharat is running from state A to D. Now this railway track information will be available on indianrail.gov.in, and from there the information can be obtained. The ratio can be very well, the ratio will basically be available on that particular site, and that can be used to distribute the valuation amount. Next, advertisement on the back of utility bills like the oil and gas bills, electricity bills that you receive. On the back of it, a lot of times you will see ads of the government schemes. So here again the distribution will be as per the amount payable. So we will also decide, the person giving the tender will also decide that okay, how many customers do you have in Delhi, how many customers you have in Maharashtra. Accordingly the amounts payable will be decided that okay, if there are large number of customers, will pay you more amount because chances are more people will see that particular advertisement, and that amount payable will decide, that ratio of amount payable will decide the bifurcation of my invoice value. Okay, next, railway ticket. Here the ratio of number of railway stations will be used. How many railway stations in Delhi, how many railway stations in Maharashtra, that will be used. Again, this information is on indianrail.gov.in. Or advertisement on radio stations, again amounts payable will be used for the purpose of radio stations in every state, and not actually the physical location, the output. So for example, the actual physical station might be somewhere else, but if that radio station is transmitting the news and whatever its output is in Delhi, so for that Delhi edition I must be paying an amount, right? Advertisement in cinema halls, you must be seeing before the movie starts, you see a lot of advertisements. One of them might be some government scheme. So here again amount payable. So for example, I am paying 10 lakh for PVR Delhi and I am paying 6 lakh for PVR Maharashtra. So here 10:6 ratio, Delhi is to Maharashtra place of supply. This ratio I will be using for distributing my advertisement value. Okay, whatever the advertisement service I am giving. Now main attention you have to pay is to this particular TV channel, internet and SMS. Internet and SMS are exactly like this. So we will understand one particular part, that is serial number 8, very properly. Is it clear? Let's start. TV channel related point. Basis of viewership. Now basically what is happening is the advertisement is being run on TV channels, right? So here the distribution in every state shall be on the basis of viewership. Now this viewership data will be obtained from whom? It will be obtained from the figures as published by the Broadcast Audience Research Council. Now what happens is, let's say in the month of October, right now it is, let's say October 2025. Now October 2025 data is not yet published. The data will be of past. After October is complete, then the data will be available. So for any particular point of time, we will have to use the past data. So for any given quarter, you have to use the figure of last week of the preceding quarter. So for example, right now it is October 2025. What is the preceding quarter? The preceding quarter is July, August, September. What is the last week? September last week. That data will be used. That data will be used for the purpose of any invoice that I must be raising in the quarter of October, November, December. And let's say if any invoice is being raised in February. So for January, February, March, I will be using the figures of last week of the December month, because that is the last month of the quarter. Okay, last week of the quarter. Now what happens sometimes is that this data that is being published, that is for more than one state. I will cover an example, but just try to understand. The Broadcast Audience Research Council might have comprised 2 states into one region for which it must be releasing the data. Now will that work for me under GST? Answer is no, because we need state-wise answers. Okay, we don't need region-wise answers. So that particular number will be divided into the 2 states. It will be divided into the 2 states on the basis of ratio of population as per the census. Now I will cover one example. I think that will be clear. Pay attention. TV channel. ABC issues a release order. This is government agency with QR channel for telecasting an advertisement related to Pradhan Mantri Kaushal Vikas Yojana in the month of November. In the first phase, it will be run in the UT. Actually, it should be called state, but it's okay. It will be in Delhi, UP, Uttarakhand, Bihar and Jharkhand. So answer of the place of supply will be these 5 states: Delhi, UP, Uttarakhand, Bihar and Jharkhand. But what will be the valuation that we have to decide? See, the place of supply will be all these 5 states, and to calculate the valuation, we are going to use the viewership data. Now pay attention. What is the mode of advertisement here? It is through a TV channel, right? This is through a channel. So here the basis of distribution will be the viewership data. The viewership data. But for the purpose of viewership data in the month of November, we have to use the last week of the preceding quarter. So with respect to the October, November, December quarter, the last week of the preceding quarter will be September last week. So that data will be given in the question. You have to pick it carefully. They may try to confuse you by multiple figures. You have to pick the viewership data of the September quarter, the September last week. So quarter of July, August, September and the last week of September. See, QR will ascertain the viewership figure for their channel in the last week of September. Why QR will ascertain? Because it is the supplier, it is giving the service. Okay, so in the last week of the September from the Broadcast Audience Research Council, let's assume this is 1 lakh for Delhi. Let's say it is for Delhi 1 lakh. Let's say for the region of UP and Uttarakhand. Now UP and Uttarakhand, it has been clubbed into 2 lakh. And for Bihar and Jharkhand, it is 1 lakh. Now please understand, for the purpose of our GST, we do not need, we cannot work with a region. We need the state-wise bifurcation. So this 2 lakh will be divided into UP and Uttarakhand on the basis of population census. So let's say that population census works out to be 9:1. So this particular figure of 2 lakh will be divided into 9:1, that is 1,80,000 and 20,000. So 1,80,000 UP, 20,000 UK. Similarly, this will be bifurcated, and then the entire ratio will be used for the purpose of that valuation, that will be broken, and the values will be respectively assigned to the different states, because every state wants its own share of revenue. If you commit any mistake in this bifurcation, then you might lead to the loss of revenue for any state, and that will be an offense. Okay, quoting the wrong place of supply is an offense with respect to the invoice, that is penalized under section 122. I hope this is clear. Now, when we talk about advertisement on internet, it is exactly like about the steps that we covered. Only thing is the view, instead of viewership, you will be picking the internet subscribers data. Instead of the Broadcast Audience Research Council, the data will be of Telecom Regulatory Authority of India. And for a financial year, you will be using the last quarter of the preceding financial year instead of the last quarter. Instead of the last week of the quarter, you will be using the last quarter data of the financial year. Now, why this difference? Because it is the difference in the way these councils and these authorities publish their data. So that is not our work. The data is going to be published as per their own standards and whatever their rules and regulations are. We are just going to be using that, and it will be given in our question. Similarly, if it is happening through SMS, we'll be using the data of telecom subscribers of TRAI. The data will be of the Telecom Regulatory Authority of India, and for a given quarter, figures of last quarter to be used, because the frequency of this data is quarterly. The period that they club the data into is in quarterly, hence we are using quarterly data. This figure is available, these figures are available on a weekly basis, so we are here using the last week data. So whatever this is not in our hands, this is not in our control. This data is being published by the respective authorities as per their own controlling procedures. Okay, we are just going to use that. This is kind of a proxy for us, right? Okay, so here last quarter is to be used, and this will be given in the question. You should be clear with the modus operandi. I hope this is clear now. Now let's move to section number 13. Then we will do a couple of clarifications. This is your main section, another section. This is the fourth one, that is section number 13. That what if the location of supplier or location of recipient happens to be outside India? Now in this case, we are not going to use the concept of B2B, B2C, because that is possible when both are in India, not when one of them is outside India. Now let's, before starting section number 13, I think we can quickly revise section number 12, all the subsections together. 12.1 is the applicability, 12.2 is the default provision, 12.3 is your immutable property, 12.4 is your personalized services like gym, treatment, makeup, beauty and restaurant, 12.5 is your performance appraisal and training, then 12.6 and 12.7 are event, admission to event, organization of event, then after event you will travel, transport. So transport 12.8, 9 and 10, transportation of goods, transportation of passengers and services on board a conveyance. Then after that the 12.10 will come, 12.11 will come, that is telecom services, 12.12 is your banking and financial sector, last 12.13 is your insurance, and 12.14 is a specific one that you need to learn, advertisement to government. Advertisement to non-government will fall into 12.2. Hope this is clear. Now we will move to section number 13. Place of supply of services where one of them is outside India. So here there are around 13 subsections. Let's start. 13.1 is the basic applicability when one of them is outside India. 13.2 is the default provision that if the specific subsection does not apply, answer of place of supply will be location of recipient if it is not available in the ordinary course of business. In 12.2 we use the words records. Here the word we are using is ordinary course of business. This is, I would say, more relaxed provision because one of them is outside India. So it's okay if you do not have the data on record. But yes, in ordinary course of business, if it is not available, then tir ghuma ke wapas location of supplier. 13.3 is one of the most technical ones, very important. Pay attention everyone. This is a performance based service. Now performance based service means if you are giving this with respect to goods or any personalized services, so with respect to any person, you need that good, you need that person, you need that particular people or the goods in physical presence in order to give the services. For example, warehousing of goods. For example, warehousing of goods. Now, in order to give the warehousing service, you require goods, right? Okay, so this is the example, pay attention. Services supplied in respect of goods which are required to be made physically available by the recipient to the supplier or my agent. So anyone who is supplying on my behalf, example, warehousing, right? Now here the place of supply will be where the services are actually performed. Here, so if the warehouse is, let's say, in Delhi and the goods belong to Mr. David of US, answer of place of supply will be Delhi where the services are performed. But guys, understand there are two specific exceptions here. Two exceptions means the answer will not be where the services are performed, but rather something else. Now, what are the two exceptions? Exception number one, pay attention. Exception number one is services are supplied on a remote location by electronic means. So here also the presence is required, but the presence is required through electronic means. Now pay attention. For example, a laptop repair is being done on a remote basis. Let's take a simple example. There is an engineer in Pune. Okay, let's say I am the engineer, and I have taken a laptop on remote basis. I have taken the access of a laptop. The laptop belongs to a person in US, let's say, and I have taken this on a TeamViewer or some kind of a software on a remote basis. Electronic means access has been taken and I am providing a repair service. Now technically, if you see, this is also a performance based service. Physical requirement is not there, but requirement of the goods is there. So this is also somewhere falling under the performance based service, but here it is an exception. If I do not talk about exception, if we don't cover the exception and we just see this particular 13.3 provision, the answer will be where the services are actually performed, that is Maharashtra. But apply your feel factor and logic. The items are existing, the item or that good or whatever that machine is, that is in US right now, that is currently situated in US. The benefit of this repair will be taken in US. So how come India should be able to get the GST revenue? Right? So this falls under exception. Answer will not be where the services are actually performed, but rather the answer will be the location of the goods which are situated at the time of supply of services. So here the answer will be US, not India, because it is an exception. The second exception is a very specific one, that we are the supplier and we are in India. Recipient is outside India and the goods are being physically imported into India for the purpose of repair. So it is a temporary import. Pay attention, there are a lot of conditions here. Temporary import. First, right here, supplier is in India, recipient outside India. The goods are being temporarily imported into India for the purpose of RTP. What is RTP? As we know, the revision test paper, RTP, you know. So here it is repair, treatment or process. There is a repair, treatment or process. So for the purpose of RTP, the goods are being temporarily imported into India, and then after the RTP, I do not intend to use the goods in India. They are exported after such RTP and without being put to use in India other than that which is required for the purpose of RTP. Now, some use might be required in the process of RTP or just to check whether the item is correctly repaired or not. But beyond that, I don't intend to use. So, for example, there is a calculator. There is a calculator that I imported for the purpose of repair. So, I will just check 2 plus 2, 4. Is it working or not? So, that use is allowed. Okay, but let's say I talk to my recipient and I say that I want to use it for 3 months. I want to cover one IDT batch and then I will give you back. So that means the goods are being used into India, then it will not fall under exception. But if all these conditions are fulfilled, what are the conditions? I'm repeating. The goods are being temporarily imported into India for the purpose of RTP. After the RTP is done, the goods are exported back without being put to use in India, except the use which is required for the purpose of RTP. So here this is another exception. So answer will not be where the services are actually performed, that is India, but rather answer will be the location of recipient. If tomorrow this is not available, then it will be back to the location of supplier. So what is the logic here? Logic here is that the goods, the items which are being repaired or some treatment or process it is being done, they are going back outside India. The actual benefit will be derived outside India. Hence, India should not get the flow of GST. It should not get its share of GST because here the goods are not being used ultimately. Okay, and the GST is a destination based tax. So here the destination is outside India. Final use is outside India. Is it clear? If any of these conditions is not fulfilled, or if the question is silent with respect to the use in India, take a clear-cut assumption and state it in your exam. Okay, so if any of the conditions is not fulfilled, then in that case answer will be this only, that is where the services are actually performed. But if all these conditions are fulfilled, then you apply this provision, and this is somewhere like 13.2 only. Next, services to persons, again personalized services, performance based services. For example, makeup service. So I need the person to apply makeup, right? For example, security service. To guard someone, to provide security, I need the physical presence. So pay attention. Services are supplied to an individual represented either as a recipient or a person acting on behalf of the recipient, which require physical presence of the recipient or person acting on his behalf with the supplier of services. Now here one question comes, that what will be a suitable example to explain this, that recipient or a person acting on behalf of recipient? What is the meaning of this? Let's take a small example of this. Let's say there is a makeup artist. Okay, I think they are termed as MUA, right? MUA. I didn't know this till some time back. So let's say there is a makeup artist and there is a modeling agency. Now this modeling agency, let's say ARA Models, ARA Model Agency. Now this particular modeling agency has made a contract, has entered into a contract for the purpose of this makeup and everything for its models. Okay, there is going to be a ramp walk show and there is going to be a glamour event for which the services of this particular makeup artist have been hired. Now who is the recipient here? Recipient definition you already know, section 2 clause 93, the person who is liable to pay the consideration. So this makeup artist is the supplier and this agency is the recipient. But actually the actual makeup will be provided on whom? The makeup will be applied on the actual models. So that models will be the person who are acting on behalf of the recipient, because the recipient is agency, but the actual people whose physical presence is required are the models. Next, in case of cutting and polishing activity on unpolished diamonds which are temporarily imported into India and are not put to use in India. So this is similar to this particular case. This is exactly like this, that if you are importing unpolished diamond for the purpose of doing the cutting and polishing activity and you are not putting to use into India, the diamonds are not going to be used in India, they will be exported back. So here also the answer will be just like this, 13.2. Pay attention. The place of supply will be determined as per 13.2, that is the location of recipient, if not available location of supplier. But here also if the item, that particular diamond is put to use in India, then the answer will be where the services are actually performed. So this is somewhat similar like above only. Next, 13.4 is just like your 12.3. Immobile property related services, the answer of place of supply will be where the location or intended location of the property. But here one clause is missing, that if the property happens to be outside India, the answer will remain outside India. You don't have to drag it to the location of recipient, that we do in 12.3. Is it clear? Next, in 13.6 and 13.7, which were differently categorized with respect to admission of event and organization of event, here 13.5 clubs both of those things, admission and organization of event plus ancillary services. Here B2B, B2C concept is not there. The focus will be where the event is actually held. Then 13.6 and 13.7 require special attention. Please understand this properly. 13.6 and 13.7 are linked to above 3, 13.3, 13.4 and 13.5. What are these? 13.3 is performance based, 13.4 is immobile property, and 13.5 is with respect to event, admission as well as organization. Now what does 13.6 say? That if any of these three services are supplied in more than one location, including a location in taxable territory. I'm not talking about more than one state in India. I'm talking about more than one country including India. For example, some service of these three, out of these three, is provided in Mumbai, New York and Dubai. So here three locations are covered, including one is in India. So here the answer will be India. You don't have to do any kind of proportion. The entire place of supply for the service, the answer will be location in the taxable territory. So in real life, you have to ensure that not even 0.1% services should be involved in India. Otherwise, the entire value will be taxed in India. And next, if any of these three services are supplied in more than one state in India. So 13.6 is more than one country including India. 13.7 is more than one state in India. So here again, that line you have to write contract agreement, but if it is absent, you will apply some specific rules. Now the rules will be applied as per the three subsections. What all three subsections we are talking here? 13.3, 13.4 and 13.5. So let's talk about these two first. 13.4 immobile property, where rule 8 applies. Rule 8 does not say anything specifically. It says that please apply rule number 4 that we have already covered in section number 12. So rule 8 is not giving any addition. It is just applying rule 4 as it is again. Now what is rule 4? Rule 4 that we have already covered in 12.3, that if it is an accommodation service and it is a separate property, then number of nights stay. If there is any other service or it is a case of single property, on the basis of area, and if it is a houseboat accommodation, then on the basis of time spent. Then similarly with respect to event, rule number 9 IGST, and rule number 9 again makes no addition. It applies rule 5 only that we have covered in section number 12, and section number 12 why we covered this rule number 5 also did not give anything specific. It just asked us to apply generally accepted accounting principles. So here there is no value addition, but because there is no such subsection dealing in section number 12, here there is something in substance which is being told in a new manner. This is something that you have to understand, because here this is basically rule number 7 IGST. Rule number 7 IGST. This you have to cover because we haven't covered this in rule number 12. Okay, in section number 12, sorry. So section number 12 does not have any performance based services kind of a subsection. So here we have to cover rule number 7. Now understand, let's say this section 13.3 performance based service is happening in more than one state. In India, more than one state. So how the bifurcation will take place? It will depend on what is the case. This is with respect to goods. This is with respect to services to individual. If services are given to individual, like for example, security, makeup, etc., the division will happen as per the generally accepted accounting principles. So we don't have to apply any mind here. The question will be very, very clear as to what ratio is to be used. But if it is a case of goods, if the goods are same, you apply 1:1 ratio if there are two states involved or whatever it may be. So you divide it equally. Okay. So let's say 3 states are involved, you do 1:1:1. But if the goods are different, you have to use the ratio of invoice value of goods. Sir, we are not clear with this. Okay, give me 1 minute. Let's see. So basically 13.3 is being done in more than one state. In India only, but more than one state. So here we are basically applying section number 13 subsection 7 read with rule number 7 IGST. It can be a case of goods. It can be a case of services to individual. Now here it is very clear. You just have to apply the generally accepted accounting principles. But with respect to goods, you have to see whether it is a case of same goods or it is a case of different goods. Now what is the example? Let's take a simple example. Let's say there is a machine which is being tested. The machine is same. The machine is same. The testing is happening in Delhi, and let's say the testing is happening in Maharashtra. Recipient is outside India. Let's say I am the supplier. So this is a case of same goods. The service being given in more than one state. So here the division will happen 1:1. If it is 3 states UP, 1:1:1. But let's say the items are different. Let's say the items are different. For example, the recipient is outside India. Obviously, that's why we are talking about section number 13. And let's say I am giving the service of servicing of car, and the cars are different. One is a Maruti Suzuki Alto, one is a Maruti Alto, and one is Mercedes. Now let's say this Alto is being serviced in my Delhi workshop, and this Mercedes is being serviced in the Haryana workshop, Gurgaon workshop. Now this is a case of different states, 13.3 performance based service, and the items are different, the goods are different. One is a Maruti Suzuki car, one is a Mercedes car. So here the ratio of Delhi and Haryana, the valuation that you have to divide, the place of supply that you have to divide, for that you will be using the ratio of invoice value of the car. So for example, Maruti Suzuki is 5 lakh rupees, and let's say this is 50 lakh rupees. So here you will use 5:50, 1:10 ratio for the purpose of distributing your valuation into Delhi and Haryana. So accordingly, Delhi will gets its own share of revenue, and Haryana will get its own share of revenue. Is this clear? Next. Similar example you can find in your ICM material also if you want to cover. 13.8, very, very important. Please pay attention. What is 13.8? 3 specific services are covered here, and the answer is location of supplier of services. Place of supply will be location of supplier of services. The focus is on the supplier. What are the 3 services? Case number 1, service number 1, banking services are given to its account holders. Banking or financial institution or NBFC is giving its services to its account holders. It can be NRE, NRO account, any type of account, I don't care. Second is intermediary services. What is intermediary? Intermediary is the person who is making 2 people meet, 2 people enter into transaction, and I am earning some form of a commission or a fee. Okay, so there is one principal supply and there is one ancillary supply. So intermediary service is there. And third one, very, very important, service of hiring. Service of hiring of means of transport, including yachts, but excluding aircraft and vessel, that too up to 1 month. Pay attention. This is talking about hiring of mechanism, hiring of the motor vehicles and means of transport, including yacht, but only up to 1 month. Only up to 1 month. And in this 1 month, this kind of service also, aircraft and vessel is excluded. So pay attention. If the hiring is happening of vessel or aircraft, then be it for, let's say, even Monday, section you are going to apply is 13.2 default provision, not 13.8. Another case, let's say for example yacht is being hired, or any other motor vehicle is being hired for, let's say, up to 20 days. Here you will apply 13.8. What if this is being hired for, let's say, 2 months? Then you will apply 13.2. So here I'm talking about hiring of the means of transport including yacht, but up to only 1 month. And this is going to exclude aircraft or vessel. So aircraft, vessel, any kind of hiring even for 1 day will fall under 13.2. Clear? Next, 13.9 is your goods transport service, which has been omitted. So 13.9 does not apply. 13.2 apply for the purpose of the goods related transport. And 13.10 and 13.11, just like 12, 8 and 8, 9, 10, here 13.9, 10 and 11. So 13.10 is passenger transportation. B2B, B2C does not exist. Focus on the embarkation point for continuous journey. 11 is services on board a conveyance, similar to 12.10, first schedule point of departure for that conveyance. And 13.12 is OIDAR, very specific, pay attention. OIDAR, you know what is OIDAR? OIDAR is services by use of internet and IT, and impossible to give in the absence of IT. So for example, Netflix, OTT platforms, online advertising, cloud services, these all are example. Online gaming, these are example of OIDAR. Now pay attention, here the place of supply will be the location of recipient of the service. So here the place of supply will be the location of recipient of service, but in case of these online services, it is very difficult to determine what the recipient of, where the recipient is actually located. So what we have done is, we have given 7-8 conditions. If any two of the non-contradictory conditions, non-contradictory means the two conditions that you are finalizing as being fulfilled, they should not contradict each other. They should not go against each other. They should not be practically impossible against each other. So any two non-contradictory conditions, if you are able to satisfy, then in that case, we are going to assume that the location of recipient is in India, because we want the place of supply in India. So any two out of these are satisfied, the answer will be India. What are these 7-8 conditions which are very, very logical? What is your IP address? So for example, my computer IP address, the internet I'm using is in India. So here one of the conditions is satisfied. Then what is the debit card, credit card that I'm using? Is it issued in India? Or what is the internet banking that I'm using? Is it in India? Or what is my address that I'm giving, billing address that I'm giving? Is it in India? Or the subscriber identity module, my mobile number, let's say +91 I'm using. So that shows I'm in India. So any two of these kind of a condition they will give, and any two conditions are fulfilled, the answer of location of recipient will be considered to be in India. Okay, so you just have to give a read to these kind of conditions. 13.3, again a kind of a subsection which is very specific in nature. Now what is 13.13? Due to the laws of our country, and maybe due to the laws of any foreign country, we have to avoid a situation wherein any kind of a service is being double taxed, or maybe it is not taxed at all. We have to avoid this kind of a situation. So this is a very specific case. You don't have to go in detail for this particular part. Here, to avoid double taxation or non-taxation, in 3 cases that I'm going to tell you, you have to fix a place of supply answer, because this has been clarified as such, this has been notified as such. What are the 3 cases? Pharmaceutical sector related R&D services provided. In that case, if a person is providing, the person who is the supplier is in India and the recipient is outside India, the answer of place of supply will be the location of recipient of the service. And here the supply should be as per the contract entered between them. And apart from this, another 2 are B2B MRO. Now what is MRO? Maintenance, repair services, overall services. B2B MRO of aircraft and related services, related parts, and B2B MRO of ship, vessel and their engines and components. In both the cases, the answer of place of supply will be the location of recipient. So basically in all these 3 cases, the answer of place of supply you have to fix in mind is the location of recipient of service. This has been notified as such. Is it clear? Okay, next we will proceed to certain clarifications, and then section number 7, 8, 9. Let's start. Cargo handling services provided by the ports to the clients. Now here there was one clarification that whether the services with respect to the wagons, these are the big, what can you say, the container kind of, basically this is technically known as a wagon, the container sized, basically the containers, okay, the big size containers. So are they going to be taxed separately? If they are going to be taxed separately, are we going to apply the subsection with respect to the immovable property? Answer is no. This is a composite supply where the principal element is the cargo handling services. So this was clarified that these services with respect to the wagon, for example, arrival of wagon, haulage of wagon, unloading, sliding, siding, and these are basically various activities involved at the port. These are ancillary to the cargo handling services, and the principal element is the cargo handling. So So they will not be separately categorized under the services with respect to the immutable property. So we will be applying the default provision. What is the default provision? 12.2 or 13.2. You don't have to apply 12.3 or 13.4 that are with respect to the immutable property. Now, next clarification was with respect to the ESDM industry, that is electronic, semiconductor and design manufacturing. So for the purpose of our GST, we don't have to go into the details of what this industry is, what the science related aspects are, what the engineering related aspects are. So we will just focus on the main GST related part for our purpose. Okay. Pay attention just how the modus operandi and a macro level transaction looks like. That there is a foreign customer who is giving IP blocks to a ESDM company in India, for example Wipro. Now what the Wipro is being asked, the Wipro is going to develop, it is going to be engaged in the process of developing software and designing some IC which is integrated circuits electronically. These are technical terms, we don't need to understand, okay, as simple as that. So ESDM company is being asked to design something that is IC, this you can learn, that is integrated circuits. Now once this is ready, the inputs are these IP blocks which are given by the foreign customers. Okay, so once this is ready, generally the foreign customer is going to ask Wipro to send this to their manufacturer in China. So communication technically can happen back to the customer, or generally most of the times the communication will take place directly to the manufacturing facility for the hardware. For example, this is in China. So China manufacturer is going to produce for the purpose of this customer using these ICs. Now what will happen? The foreign customer will call up its manufacturer and say that do not produce the entire item at first. First, let's get one sample ready and let this Wipro company which has made this integrated circuits, which is an important part, let's get it tested. So whenever you take a large scale production, generally what we will do in real life also, we will get one sample tested, and when it is okay, when it is tested and certified okay by the Wipro which has made this ICs, then further production will happen. Is this very logical? Yes, it is very logical. We will make sample first, we will get it tested and certified, and then okay, we will give the green signal for the complete production. So same thing here is happening. For testing, the sample is ready. For testing, or we can say the prototype will be then provided back to the Indian company Wipro to test and validate the software that has been designed by the Wipro company, and to ensure that it is error free. Now the question comes that whether this testing service is going to be taxed separately. If yes, we will be apply place of supply provision separately. Then 13 subsection 3, that is performance based service, because the requirement will be there of, the physical presence of goods will be required. So are we going down that particular line of thought? Answer is no. The testing service is ancillary to the main service. It's a composite bundle. It's a natural bundle where the principal element is this development of IC. The Wipro company has not been appointed for the purpose of testing. It has been appointed for the purpose of designing ICs, and testing is an integral part of, or you can say it is an ancillary part to the main element, that is developing of ICs. Had this been another company, let's say Infosys involved in the picture just for the purpose of testing, then we could have thought on that line of thought. Then basically we could have gone on that line of a thought that yes, this is a separately testable taxable service, being the testing service, for which 13.3 could have been applied. But here, no, you're not going to tax it separately. Normal 13.2 default provision will apply, that is under the 13.2, not 13.3, not performance based service. Now there was one guidance, there was one clarification, these two are okay. There was one clarification with respect to what is the meaning of intermediary, because if you apply the concept of intermediary wrong, then you will apply 13.8 wrong. Okay, so just understand, intermediary means these are general factors to be considered in any transaction. There will be minimum of 3 parties. So 2 are the main parties and 1 is the intermediary party. 2 distinct supplies. 2 distinct supplies means 1 is the main supply and 1 is the intermediary related supply, for which he must be charging his commission. Not on own account. The intermediary is not doing anything on own account. He's just ensuring that 2 parties meet and he's earning a commission. Subcontracting and outsourcing is not an example of intermediary. So for example, you and Mr. A are involved in a transaction and you give a part of that supply, you outsource that part of supply, or you subcontract a part of that to me. So here I am not an intermediary. I am not making you to meet. I'm not arranging any kind of supply between 2 parties. This supply that I am giving in the subcontracting or whatever this outsourcing part, So that part of supply is being given by me in my own account. It is done by me in my own principal to principal capacity. I am not acting as an intermediary. So there in the question, you have to analyze very, very carefully whether the provision of intermediary are going to apply. Then only you will apply 13.8, otherwise you will apply 13.2. And in the context of section number 12, intermediary does not have any separate subsection. You will be applying 12.2 only. Is this clear? Okay. Next clarification was with respect to the advertising sector. Let's take a small example that let's say Burger King is going to get one of its advertisement. It wants one of its advertisement with respect to this buy one get one ad on a billboard on hoardings in, let's say, Mumbai, Maharashtra. So for the purpose of that, the advertising company, that is Burger King in my case, has contracted with one of the advertising company. Let's say it's a White River Media company. So this White River Media company has contracted with the Burger King, that is the client. So this is one part of the transaction, but another part of transaction is after this supply is done, the advertising company will be contacting one of the vendors who is holding the rights with respect to this billboard. Okay, so there are two distinct supplies. One is vendor and advertising company, one is the advertising company and the client. Now please understand with respect to this part of the transaction, which section is going to apply? Section number 12.2 is going to be applied. Sir, why not 12.14? 12.14 is only and only advertisement to government. Okay, advertisement service to government. This is not government. So you are going to apply the default provisions. Here default provisions will apply. But what about the part of the contract, the part of the supply between the White River Media, that is advertising company, and the vendor? So here the kind of supply and which place of supply section is to be applied will depend on how the transaction is being entered into. In some cases, the space or rights to use the space are clearly given to the advertising company, that for 1 month, let's say whatever amount will be charged, you are responsible for this billboard. You are responsible for getting the ad of your client installed. For 1 month, you have the rights. Okay. So this is related to immovable property because this billboard, this hoarding structure is attached to the land. It is not movable, it is immovable. So you are going to apply what? Section number 12 subsection 3. Is this clear? But in another case, it is possible that the nature of contract is the vendor is not going to sell any rights. He is not going to give any right with respect to the hoarding. He will just say that, okay, whatever ad you want for your client, you tell me and I will get it done. So here the vendor will remain responsible for display of advertisement of the advertising company's client. So this will fall under default provision, not under immovable property. This will fall under 12.2, not under 12.3. Okay, is this clear? Next, now 3 sections, section number 7 interstate supply, section number 8 interstate supply, and section number 9 territorial water supply. Now pay attention, what is interstate supply? As I told you, the interstate supply means the location of supplier and place of supply is in 2 different states, UTs, or 1 state and 1 UT. Apart from that, there are certain specific transactions which are to be considered always and always as interstate supply, not intrastate supply. Point number 1, import export is always considered in the nature of interstate. Point number 2, SEZ developer or SEZ unit. SEZ developer or SEZ unit is always considered to be in the nature of interstate supply. So for example, I am dealing with a SEZ unit. Now regardless of, let's say, my location of supplier and the place of supply happens to be in the same state, still it will be considered as an interstate supply. Is this clear? So this part is done, this part is done. Interstate supply, when the location of supplier and place of supply is outside India. So basically the supplier is in India, place of supply is outside India. Or you are dealing with SEZ developer or SEZ unit, that is always considered as interstate. So import export we have covered, SEZ developer unit we have covered, and C is the residual clause. Pay attention, I will give you one very important example on this. This is residual clause. See, what are they saying? The supply is in taxable territory, not being an intrastate supply and not covered elsewhere in this section, that is a residuary clause. So whatever is not covered elsewhere in the section, whatever is not an intrastate supply, that is section number 8. So finally it will be considered as interstate supply. Let central government have the control over it. So we will cover a small example, very, very important one to clarify this concept. Pay attention, guys. So let's say I am a supplier based in Pune, Maharashtra, and I am giving some services to a person of UK. The service is with respect to the goods which were temporarily imported into India, but I have used the goods. So I am defeating the condition of section number 13.3 exception, right? 13.3, I am using the goods. After the repair, I am using the goods in India. So here the exception will not apply and place of supply will be where the services are actually performed. Okay, the exception conditions I'm not applying, I'm not fulfilling those. So where the services are performed, hence the answer will be Pune, Maharashtra. Okay, and I am also based in Pune, Maharashtra. Now what the case will be here, if you see primarily the location of supplier is in Maharashtra, the place of supply is in Maharashtra, ideally this should be an intrastate supply, but it won't be intrastate supply. Just to complete this example, I will quickly cover section number 8 as well. Pay attention. Section number 8, intrastate supply. There is one noting that we have to understand here, that intrastate supply means location of supplier and place of supply is in same states or same union territories, but this is subject to section number 10 or subject to section number 12. Now what is the interpretation of this line, subject to section number 10 or subject to section number 12? This is when, this means that the location of supplier and place of supply is in one state, that is okay, but the point is the place of supply should be determined as per section number 10 or section number 12, not as per section number 11 or 13. Please understand what I'm trying to say, what we are understanding and interpreting here. This is a very important example that we are understanding, that any supply would be an intrastate supply if place of supply and location of supplier is in one state or one UT. That everyone knows. But you have to understand that this is only when the place of supply is determined as per section 10 or section number 12, not as per section number 11 or section number 13. So here in this particular example, they both the ingredients are in same state. But here the place of supply is determined as per section number 13, not as per section number 12. Because logically also, if you apply the feel factor, it does not sound right that one person is outside India and still you are considering this as an intrastate supply. No, then this will be considered not as a part of intrastate supply, and ultimately this will fall in the residual clause, that is supplies in India, it is not intra, not falling anywhere else, hence it will be considered as interstate supply. There is one question asked by the ICI, so we have picked this example on that particular question basis only. Okay, so here intrastate supply, you are going to consider this, but provided the place of supply determination is as per section number 10 or section number 12. Okay, apart from that, any supply you are making to a tourist means a person who is coming into India for non-immigrant purposes, he's not looking for citizenship and he's staying up to 6 months. Okay, he's a tourist, he's here to roam, he's here to just see the places. So in that case, any supply of goods, not services, any supply of goods to a tourist would be considered always as interstate, not intra, because ultimately the goods are going to go outside India. Then there is an explanation, that is establishment will be treated as establishment of distinct person. Sir, where do we use this definition? This definition is used in the export of service definition that I will cover in a couple of minutes. But understand, establishment shall be treated as establishment of distinct person when there are two units in one state, one unit in one state, another unit in another state, or one unit in India, another unit outside India. So basically at the end of the day, you are one company only, you are one person only, you just have different units either in one state, more than one state, or more than one country. Now, before we will do question section number 9 also, and then I will cover the definition of import-export. Pay attention. Supply and territorial waters. Now, as you know, supply or location of supplier or place of supply can be in territorial waters also, and territorial waters is a part of India. But at the end of the day, I cannot assign the place of supply or location of supplier as water. I cannot say that the answer is water. We have to apply some state. So we will see which is the nearest state. So for example, this is just your territorial waters. Let's say this is your territorial waters, and from this particular point there is a coastal state A and coastal state B. This is 6 kilometers, this is 3 kilometers. So if place of supply happens to be here, the answer would be the state we will assign is B, not A, because we will focus on the nearest state. Okay, we will see which is the nearest point of that baseline. Clear? Now we will quickly cover some definitions with respect to the import-export, goods and services. Goods import and export, and services import and export. Now this is the most important one. Okay, goods is very easy. Import-export of goods means, import means you're bringing goods into India. Export means you're taking goods to outside India. So you're crossing 200 nautical miles. That is a simple export of goods. No separate conditions attached. For import of services, there are 3 conditions. Supplier is outside India, recipient is in India, and place of supply is in India. That's it. This is import of service. Now what is export of service? These 3 conditions are vice versa. That is, supplier is in India, recipient is outside India, place of supply is outside India. Two more conditions. They should not be establishments of distinct persons. So my one company is in India, there is another establishment outside India. Now we cannot be categorized under export of service if I am giving any services to it. Okay. Apart from that, in exemptions chapter, you cover that may fall under exemptions. There will be exemption that you will enjoy, but it won't technically be an export of service. It won't technically be a zero rated supply. You won't get the benefit of ITC. Many people ask, so what, sir? It is not export. We will claim exemption, but you are going to lose ITC, dear. You are going to lose ITC. That is wrong. Okay, that is a disadvantage. So not establishments of distinct person. And fifth, the most important condition is payment should be received in convertible forex. Payment should be received in convertible forex or INR wherever permitted. INR is generally permitted in Nepal and Bhutan, with which we enter a lot of rupee trade. There the RBI has permitted. Okay, these are the 5 conditions for export of service. Now I want to move ahead. 2 sections we will cover and then couple of more clarifications. Then the chapter will be done. Now section number 14, I will actually cover this through handwritten notes only to have a good understanding. Now pay attention, what is section number 14? Section number 14 is talking about OIDAR services. OIDAR services, who is supplying? Supplier is outside India. Okay, supplier is outside India. He is supplying these services to a recipient who is in India. Who is in India, and this recipient is unregistered. So technically he is known as non-taxable online recipient. Sir, what if he is registered? What if he is registered? If he is registered, then the RCM will kick in and there is no need of registering or getting this person to pay any tax in India. There the RCM will apply. The importer, this particular person, will pay the tax and he will take the ITC. There is no question of getting him registered in India. But section 14 is going to apply when he is unregistered. Also, please understand, in such case, this supplier will be asked to come into India and pay IGST under forward charge mechanism. Why? It won't be fair for the unregistered person. Tomorrow these unregistered persons can be students like you who are taking, let's say, some ebook, or let's say you are buying Netflix subscription. So you are technically unregistered person who is buying an OIDAR service. So is it fair for you to ask you to go and get registered under GST? Answer is no. So here the supplier will be asked to come and pay GST under the forward charge mechanism, for which section number 24 also comes and clarifies that compulsory registration will apply. Compulsory registration will apply, and hence there is no threshold limit. Is this clear? Now with respect to this, just quickly review section number 14, OIDAR supplier, and I'm only talking about the NT or recipient, because if it is registered, import of service, RCM will apply. Who is liable to pay the GST? Supplier is liable to pay the GST. Now here there is one extension, there is a deeming provision with respect to which what they are doing. Intermediary who is arranging this OIDAR service, he is being termed as a supplier. So basically he is deemed as a supplier because government wants to fix the responsibility on him, unless he satisfies 4 conditions. If he satisfies all the 4 conditions, then the intermediary will not be considered as a deemed supplier. He will not be considered as a deemed supplier. He will not be considered as a deemed supplier. Now, what are the conditions? First of all, he satisfies the condition that invoice or whatever the document is made available by the intermediary is clearly identifying the service in question and its supplier in non-taxable territory. So the invoice is very clear that there is a third party supplier. I am not involved in this service as a supplier. First condition, I am able to satisfy this. Second, the intermediary satisfies that he is not authorizing the charge, he is not collecting or processing the payment, he is not authorizing the supply of services. So the complete payment related control is with the third party supplier. So how can you make a deeming provision considering me as a supplier? Third, I am not even authorizing the delivery of the supply of services. And fourth, the terms conditions are also not set by me but by the supplier. So in short, if you understand the feel factor of this, the intermediary is proving that it is not involved in any of the transactions. It is not controlling any transaction. It is merely charging its commission or fee. With respect to that, intermediary will be responsible. But OIDAR service, supplier will remain responsible, not the intermediary. Next, what type of registration the supplier will obtain? This is you cover in chapter number 8, single registration, simplified registration scheme. If you have any representative in India for any purpose, he can get registered on your behalf and pay IGST. That is completely fine. But if you do not have physical presence, you also don't have representative, then no, you will have to comply with it. You will have to appoint someone who will get registered and pay IGST on your behalf. We want the tax. Okay, now let's compare this with section number 14A, that is with respect to online gaming money. Online gaming money. Now, first of all, pay attention. Online gaming money is not OIDAR. Online gaming is OIDAR, but online gaming money is not OIDAR. This is a specified actionable claim. This is a specified actionable claim. Hence, it's a goods. Because all actionable claims are specifically covered in the definition of goods. Pay attention to the review the definition of goods. You will have a clear understanding of that. Now here what section 14A says, that if a supplier is in non-taxable territory and he is supplying any online money gaming to a recipient in India. Now this recipient can be registered or unregistered. I don't care. Sir, why don't I care? Because unlike in OIDAR, what happened in OIDAR, if the recipient happened to be a registered person, then RCM would have been applied. Here there is no such provision. In case of the goods table that we covered for RCM FCM, we didn't cover any such case of import of goods or anything. In fact, the entire import of goods matter is handed over to the customs law. Yes, online money gaming is not handed over. It is kept in our GST law, but it is not covered under any RCM FCM provision. Basically not in RCM provision. So here the status of recipient is irrelevant for me. It can be registered, it can be unregistered. Here section number 14A will apply, FCM will apply, IGST will be paid by the supplier. He will have to take a compulsory registration as per section number 24, and mandatory registration will apply. Single registration, simplified registration scheme. All those points will apply as it is, just like we covered for OIDAR. Single registration and simplified registration scheme. Simplified registration scheme. Is this clear? Now couple of points more. Pay attention. Here it does not matter what is the status of recipient. Okay, FCM is going to apply. So status of recipient you are going to see in section number 14, not 14A. Now this is done. This is done. Same, that if you have a representative, he can get registered and pay GST. But otherwise, then if you don't have a representative, you do not have physical presence, please ensure you appoint someone. Now, if you still fail to comply with our provisions, then notwithstanding our IT Act section number 69A places certain amount of restrictions on what actions can be taken with respect to the information accessed by public. Okay, but if you do not comply with the above provisions, that is, you do not pay IGST in India under FCM, then in that case, regardless of what our IT Act says, we are going to block your information for access by public. And once your information is blocked, we know you will 100% come to India and pay IGST, because in today's times, more than money, the information matters, the value is of information. So we know that if we do this step, if we take this hard step, you will come into India. So notwithstanding anything under section number 69A, any information generated, transmitted, hosted in any computer resource used for supply of this online money gaming shall be blocked for access by the public. So if we take this kind of a step against you, we know you are going to come into India and you will comply with everything. Then we will remove the restrictions. Okay. Now, couple of clarifications more. The chapter is over. Certain clarifications, pay attention. If goods are sold to unregistered person, just like your OTC sale, but billing address is different from delivery address, because this happens in e-commerce. So in OTC sale, there is a physical purchase. Here it's an e-com purchase, but concept is same. Billing address is something else, delivery address is something else. Just like in physical OTC sale, I used to buy in one state, but I used to take back to another state. So here it has been clarified. You have to apply rule 10.1, section number 10.1 CA, but the answer will be delivery address, because there the benefit will be taken. So the field factor is same. We are going to see which state is going to get the ultimate benefit, because there the consumption and use will be there. So here the answer of place of supply will be where the delivery address is there. This was asked in May 25. Okay. Next couple of examples, couple of clarifications. Pay attention. Custodial services provided by banks to foreign portfolio investors. Are we going to apply section number 13.8 here? Answer is no. Why? 13.8 is applied when any bank is giving services to its account holders, and foreign portfolio investors do not hold any account here. So here you have to apply section number 13.2, not 13.8. Next, advertising services. Now understand what is the modus operandi. Let's say there is a foreign client Tesla, and there is an advertising agency White River Media. So sometimes these people, that is the foreign client and advertising agency, they enter into a contract to provide, where the White River Media is asked to provide a complete one-stop solution with respect to advertising, right from content planning to management to everything, right? And after this contract is entered, the White River Media, that is the advertising agency, will enter into the different contracts with media owners for getting the advertisements and everything. Now pay attention. First question comes that with respect to this advertising agency and foreign client, do you feel this advertising agency is acting as an intermediary? Do you feel that this is an ancillary supply and there is some another main supply? Answer is no. In this case, there are two main supplies. There are two P2P contracts, principal to principal 1 and 2. So advertising agency here is not acting as an intermediary services. It is providing a main supply on its own account. So this will be categorized under 13.2 and this will be categorized as per section number 12.2. Is this clear? Okay, now there was one more clarification, that who is the recipient in this particular transaction. Now you know that as per section 2 clause 93, the recipient is the person who is liable to pay the consideration. So the foreign client is the recipient, not the representatives in India, not the audience who is going to see the ads. Obviously that is just a clarification to address certain queries that were coming in the market. But we know by basic GST law that recipient means the person who is liable to pay the consideration. So here foreign client, that is the Tesla company, is paying the consideration, hence it is my recipient. Now can this be an export of service? Possible, yes. That if all the conditions are satisfied, that is supplier is in India, recipient is outside India, place of supply will be outside India 13.2, and forex is received, and obviously these are not establishment of distinct persons, then in that case, if all conditions are satisfied, very well, this can be categorized as a export of service. Is this clear? Next, but what if, sir, the media owner and foreign client Tesla are directly entering into contract, and if the White River Media is genuinely acting as an agent, it is not giving any one-stop solution or any such kind of a contract to the foreign client, it is just acting as an intermediary, and it is ensuring that the media owner and foreign client get into some form of contract, and then the White River Media is acting purely as an agent, earning its own commission. Then can we apply 13.8? Answer is yes. Here 13.8 will apply because it is acting as intermediary. So the facts of the question will decide whether 13.8 will apply or whether 13.2 will apply. Okay, and last but not the least is one simple clarification. Pay attention, everyone. There are three parties involved. One is the cloud computing service provider, for example, Amazon Web Services. It has various clients all over India, all over the globe. And for providing this cloud computing services, let's say it is using some services of data hosting service providers in India. So example, GoDaddy is a data hosting service provider. Now only question that arose for the consideration is that whether this GoDaddy, that is the data hosting service provider, acting as an intermediary. No. Understand the feel factor. Intermediary means what? You are arranging a supply, you are earning a commission or fee. There is one main supply and here is ancillary supply. No, here there is not a case of intermediary, rather this is a main supply itself. I'm marking this again. This is a main supply in itself. These services are supplied on P2P basis by the DHSP. Okay. This particular company does not care who the customers are. It does not care who the end users are. It is only concerned with its contract with the cloud computing service provider. And secondly, as I clarified above, that can this particular service be an export of service? Yes, it can be an export of service because supplier is outside, supplier is in India, recipient is outside India, place of supply will be covered as per section number 13.2. So that possibly may fall outside India because it would be outside India. Payment if it is in forex, then yes, all conditions would be satisfied and then it can be an export of service. That is a separate issue. Primary issue that arose for consideration is whether this is an intermediary. Answer is no. Okay, this was a small diagram that I made for section 14a link with section number 24. Only point to be reiterated is in case of OIDAR, section 14 is going to apply when the recipient is NTOR, but 14a, the recipient can be registered or unregistered. It is not OIDAR, it is online gaming money, specified actionable claim. With this, the chapter of place of supply is complete from my side. I really hope you enjoyed the session. If possible, do ensure that you're dropping a feedback, you're liking the channel, and you're basically subscribing the channel because it helps me to reach more students. Okay, so this is for the place of supply. We'll meet in our next chapter, that is exemptions. And yes, we are starting with the practice batch also very soon from 10th of November. That is available in 100% English also. So some important revisions will be there for you in English. The practice batch will be there for English. With all those things, I think you will be ready to get 80 plus in IDT. Right? So this was all from my side. All the very best. Take care. We'll meet in our next lecture. Bye bye.